Hey, what's up, my YouTube fam? I'm back. This is Larry with the Best Credit Repair channel. We got an exciting class today. We're going to be talking about LexisNexis and how could affect your insurance. And a lot of people don't understand the power of these third parties and how they're affecting other areas of finance for us, insurance, uh, your uh, your background check. So it's a lot of other areas that they affect. Your check cashing, can you get a checking account? You know, what type of auto loans and all kind of credit cards, these third parties are affecting that too. And a lot of times we get so concentrated in just the Experian and TransUnion and Equifax and Innovis, and we don't really go after these third parties which house information on us that the credit bureaus are using. I think we're not concentrating more on these because they are holding information. So why I'm giving this class, a lot of people don't talk about this, because I read an article about a guy that he was paying high insurance, and he could not understand why he couldn't get any lower insurance. His insurance was always high until he pulled his LexisNexis report, and there was an accident on his LexisNexis report that was not his. That was costing him years of money that he didn't even have to pay because it was misinformation reporting on his LexisNexis account. So we're going to cover all of that in this video. But first, I want to say thank you for all my new subscribers, for really rocking with me. This channel is all about bringing y'all real information, breaking it down, making it simple for y'all so y'all can get the results that y'all want. That's what we all about on this channel. But the other thing, I need y'all to start liking these videos so we can push these videos. Like, subscribe, and share the videos. I know I'm really trying to get more and more videos out to you and kind of cover around area. I got to get back on my lives. So every Saturday, I'm going to start getting back on doing lives. But we definitely, please like the videos, like the content, like and subscribe and share. And I appreciate y'all. Thank you very much for rocking with me on these videos. But this class is really going to be geared about, the reasoning code. Let's break down why they do the insurance companies do the things they do, why it's affecting you, and why everybody is trying to nickel and dime us and use information against us to get more money from us. Why? You got to understand why. Because if we can keep you on a leash, if we can keep you dependent, not letting you to be able to grow your financial wealth, right? To have money to invest back in yourself, and we can keep you dependent, then we can keep you making money off of you, right? So we have to understand there's other areas. Don't just so be concentrated on this Experian, Equifax, LexisNexis, Innovis. We need to dig into these third parties, CoreLogics, LexisNexis, Stagestream. I think it's ACR. We have to get on these third parties and find out the information they're housing us. It could be affecting your job, affecting your mortgage, your insurance, car loans, so many different things. And then the credit big three are using these third parties to verify information. That time they can't verify. The creditor probably ain't got time to get back to them. They trying to go to somewhere else and see if they can match up. Please. And they don't tell you this stuff. Right? All these people that get on YouTube talking about they worked at the credit bureau. No, they're using this information, but do they tell you? No, they don't tell you. That's why I don't listen to them jokers either. Right? They're all trying to hide information because they don't want the consumer to know what's out there on them. So now, because we're not clients of the credit bureau, all these people that's charging us are clients. So who's really benefiting? Right? We don't benefit from it. All they do is make sure they try to get more money from us. And I understand that people out there don't pay their bills, don't do the right thing. but they're still putting bad information on good people and causing good people to get their money taken from them. So we're going to get into that. So we're going to talk a little bit about LexisNexis and insurance scoring. I think it's something you really need to know. We're going to go over why and some of the reasoning codes and understand that you have an insurance score that they're using against you. I'm going to read a couple things to you. Why do insurance use credit? Insurance companies use financial history along with other factors such as years of driving experience or claim history to properly classify insurer according to his or her potential risk. Studies have shown a correlation between a consumer's financial history and his or her future insurance loss potential. Thus, insurance companies believe that the use of credit helps to underwrite an applicant at a cost that affects their specific risk. Right? What information they're going to use? Identifying information, credit history, public records, inquiries, and there's more I'm going to cover. They didn't even tell y'all this. You have an insurance score. Why do insurance companies use a score credit report? And then, what is an insurance score? This is what we want to talk about. How does it differ from a financial score? An insurance score is a credit-based statistic analysis of the consumer's likelihood of filing an insurance claim within a given period of time in the future. This data can help underwriters better assess risk exposure prior to granting insurance coverages. So understand that the insurance companies are using information on your credit report and other information. But remember, they're going to LexisNexis. That's why LexisNexis is giving an insurance score, right? Think about that. They're not particularly going to they may think you may think they're going to the big three, but they're going to LexisNexis and then pulling this score based on what's on your credit report. And they're using and they're combining both of them. And LexisNexis is holding information about your credit to give a particular score to the insurance agency that could be causing you to pay more money for your insurance. But what are these codes? Like, I pulled up. If you want this information, I have, and there are lots of these codes, and I'm not going to cover all of them. I just printed 15 pages, and I'm going to go over a few, and that's not all of them. So we're going to go over this. LexisNexis resolution wants to help consumers better understand scoring for their insurance purposes. To do this, we have provided detailed explanation about key factors that affect your particular credit-based insurance score at the time of request. There's many different types of scores derived from consumer financial credit data. Be aware that this is possible that changes you make to improve your credit-based insurance score, which is a predictor of future insurance losses. Could this be adverse? This could adversely impact some other scores, such as for one used for mortgage and auto finance purposes. You see what I'm saying? Let's get into these codes right quick for you. Code 0101, the number of public records items. Now I'm gonna read some of all of this, and then I'm gonna break down each one. So they break down what information is used to message derived from, how does this affect the insurance risk score, and then what can I do to improve. I'm gonna skip what I can do to improve. I've done plenty of classes on how to improve certain areas, but I want to just talk to you about how the insurance company is using this information against you. What information is this message derived from? The score considers how many derogatory public records are on your credit file. The derogatory public records considered are bankruptcy, lien, garnishment, judgments, and suits, right? Now you're asking, okay, so what does this have to do with my driving record, and what does it have to do with my insurance? This is what the insurance agencies or insurance companies are saying. How does this affect my insurance risk score? The insurance industry research shows that consumers with adverse public records are more likely to have insurance losses. Right? So they're taking that you have a derogatory public record as an indicator that you're going to have insurance losses. 0102, the number of inquiries for transactions initiated by a consumer in the last 6 months. I'm just going to read the part that says, how does this affect my insurance risk score? The insurance industry research shows that consumers who are looking to obtain new credit accounts have more insurance losses. While not all inquiries initiated may be a result in opening an account, it is an indication of a possible increase in credit obligation. Let's go. 0103, the length of time accounts have been established. How does this affect my insurance risk score? The insurance industry results show that consumers with longer experience manage their credit accounts have fewer insurance losses, right? They got to find something to try to tag you. 0104, the length of time since newest account have been established. How does this affect my insurance risk score? The insurance industry results show that consumers with recent open accounts experience more insurance losses. A recent open account is an indication of increased financial obligation. Okay, but what is that increased financial obligation, and how you drive, and how you have insurance losses, right? I'm trying to see what was the studies that they used to get that information. The number of open sale finance accounts with high percent of balance to credit limits. How does this affect your insurance risk score? Insurance industry results show that consumers with limited credit history that have more recent established obligations with a sales finance company experience fewer insurance losses. The number of open installment bank accounts. How does this affect your insurance score? The insurance industry shows that consumers with outstanding loans have more insurance losses. Check this one out. The number of open retail accounts. How does this affect my risk insurance score? The insurance industry research showed that consumers who utilize retail cards to purchase merchandise have more insurance losses. Think about all this, what they're doing. Then this is all the insurance agency's way of getting more money out of the consumers. The number of vehicles related account with a current past due amount. How does this affect my risk score? Insurance industry research showed that consumers who do not pay their vehicle related accounts on time have more insurance losses. Didn't say don't pay the insurance bill on time, they have more insurance losses. The number of vehicle related accounts current or in past with 30-day late payments. Insurance industry shows that consumers who have 30-day late payments report on these types of account have more insurance losses, right? Doesn't talk about they don't pay their insurance bills on time. They're worried about them filing losses. So it kind of make you think about, are they using demographics or your where you live at to try to determine some of this stuff, right? The number of all company accounts current or past due. How does this affect my risk score? The insurance industry research showed that consumers who have delinquent payment on their oil company cards are more have more insurance losses. Let me skip over some of these. Okay, here go another one. Length of time since most recent activity reported. How does this affect my risk score? Insurance industry research show that consumers with more recent activity experience fewer insurance losses. Recent activity demonstrates that you are an active credit user and allows the score to evaluate recent experience. Uh, wait. Okay, another one. A number of accounts with a balance current paid as agreed. How does this affect my risk scores? Insurance industry research showed that consumers with open active accounts have a better loss experience. This is primarily a factor of consumers who are either trying to get their credit history established or who mainly maintain few accounts. Uh, so let's go to another one. Okay, accounts with reported delinquency status, including bad debt and bankruptcy. How does this affect my recent risk score? Insurance industry shows that consumers with missed payments experience more insurance losses, right? So, so if you can see, and I'm still doing. I mean, I'm on page 11, and I'm kind of number of collection agency filings. How does this affect my risk score? Insurance industry research showed that consumers with collection items have more insurance losses. So see how they use every little thing to say you're going to file an insurance loss. Not that you're not going to pay your bill on time, but we're going to tag you for more every month for insurance because you're going to file a claim. You're more likely to file a claim, and we're going to tag you, right? So see how it's so important at your credit because everybody is trying to use your credit to get more money out of you, right? Because I would like to know what was the studies, who did they talk to, where did they get this information of, how did they collect this information, what were the demographics that they used to collect this information to come up with this with these results to be able to charge more for insurance. So I'm gonna read this last one. The total credit limit on open department store accounts. Now this is all stuff they use to judge how much they're gonna charge you on your insurance. How does this affect my risk score? The insurance industry research showed that consumers with higher available lines of credit on department stores experience more insurance losses. So, hey, I have all this information. If you're intrigued and you want to look at this stuff and go over, I have it. Shoot me an email. I will send it out to you. Uh, this this thing is actually 97 pages of information that results in your risk score for insurance purposes, right? So if you want to know more about this, shoot me an email. I'll send you the file free of charge. I like to get this information out to y'all. Shoot me an email. I get it out to you. But it's powerful information. That's why these third parties, again, you need to be finding out what they are housing on you. Is this information correct? Get that information off of there. It definitely would help you on your journey getting the big three credit reports together. So, hey, it's all about finding out, man. Information is power. This is powerful information to help you. So, again, like, subscribe, and share. Please, please share this channel. Please, please like this channel. Please, please hit the thumbs up. And I want to continue to bring. We're going to be coming with I got some more investment videos and I got some more credit videos for you. So I appreciate y'all rocking with me. and I'm out.